It's going to sound a little crazy to say this, but I'm not a big believer in financial literacy. I'm much more interested in sort of real-time news you can use to help people make good decisions. That next generation of technology is going to create enormous opportunities to help people really improve their financial health. Our research shows that financially healthy customers are better customers. They're stickier, they're more loyal, they are open to using more products from that same institution.
Jennifer Tescher, the founder and CEO of the Financial Health Network. I'll be speaking to Jennifer about the financial industry's growing focus on people's financial health, why it matters, and how new technologies are presenting incredible opportunities to transform the way people manage their finances.
The more you can try to improve the financial health of your customer, you're essentially building a better book of business.
Hello and welcome to another episode of Money Travels presented by Visa, where we explore the extraordinary innovations in digital finance, transforming lives and livelihoods everywhere. I'm Rich, and it's only me today. You voted, and you have your favourite host. Now, unfortunately, Max is on vacation. Jennifer, welcome to the show.
Thanks, Rich, for having me.
So I don't know if you know this, but at the end of each episode, we ask people for recommendations of people that they'd like to see on the show. And you were recommended, and we extended the invite to you from JP Nichols, who was our first ever guest on this show.
Oh, that's so kind of JP. He's a great guy, and he and his team do really important work.
Amazing. So listen, he'll be listening to the show, and no doubt providing me feedback on things I should have asked you that he wanted to hear about. But so listen, let's get into it. The first question I have for you is just the words financial health, because we've talked on the show to people around financial well-being, financial literacy, financial inclusion. Maybe you can just unpack those two words for us.
Absolutely. 21 years ago, when I founded the organization, it was actually called something different. It was called the Center for Financial Services Innovation, CFSI. Try saying that 10 times fast. I can tell you you can't do it. And that's one of the many reasons why we ultimately changed the name. But the real reason we changed it is we started out focused very much on access and inclusion to financial services. And then over the course of our first 10 years, several things happened. The iPhone was invented, a big part of access solved. We had a financial crisis. Wow, maybe those bank accounts weren't such a good idea for people. And then we had a Great Recession. Wow, this isn't just a poor person's problem. This is the majority of Americans who are struggling financially, and we missed it.
So what does that actually mean for the average American?
So when we measure financial health, we think about people's ability to spend, save, borrow, and plan. Those are things we all need to do. And it's really not rocket science. Can you pay your bills on time? Do you bring in more money than you spend in a given month? Do you have enough short-term savings? Do you have enough long-term savings? Do you have too much debt? Do you have a good credit score? Do you have sufficient insurance? And do you plan ahead? That's how we really measure in a more granular way. And so, for someone who's financially challenged, they're struggling to make ends meet. They don't have enough money at the end of the month. They're having to choose between bills. There is no savings. And when there is no short-term savings, it's very hard to think about long-term savings and retirement. They may have too much debt. They may have no debt because they can't get any debt. They can't get any loans in the first place, but they probably don't have a very good credit score because they've ruined their credit at some point by taking on too much debt that they can't pay. They're not able to plan ahead because they can't think about today. And they probably just don't have enough protection in the form of insurance. And, unfortunately, that's the reality for about 17% of Americans. It's not unusual. to be in that boat in a country like this. And so it was in that moment that we realized that we weren't in this just for access. We were in this to help improve people's financial lives. And in order to improve people's financial lives, you really have to, as a provider, think about the outcome, not just think about giving them a widget. You've got to think about what's the outcome that people actually want. And we believe that's financial health. We've spent the last 12 plus years defining it, creating a framework and a measurement methodology around it. And so we define financial health as having a day-to-day system that enables you to build resilience and thrive. We think that financial health is measurable, kind of like going to the doctor and having your blood pressure taken. We believe that it's holistic. It's not just one piece of data like your credit score. It's got to look at the totality of your financial life. And we believe it's changeable. And we have data that demonstrates that. So that's how we think about financial health.
And of course, this isn't just people in the financial services industry who care about this. I think there's been an interesting collaboration with some royalty I've heard that you've kind of worked on with this.
There is. I get to say that I know a queen, Queen Máxima. Her Majesty Queen Máxima of the Netherlands, who's actually Argentinian by birth. She married into the family. She, for 15 years, has been the United Nations Secretary General's special advocate for, at the time, inclusive finance. Think about financial inclusion. She really was like the financial inclusion champion globally. And over the last, say, 5 to 8 years, there's been dramatic progress around the world as it relates to inclusion. And so that movement started to think about, well, what next? And so they looked to us because we had already made that shift from access to outcomes. And we work very closely with the Queen and her team. And I'm excited to say that last year, at her 15th anniversary in this role at the United Nations, she actually changed the name of her title from inclusive finance to financial health.
I thought you were going to say the name of her actual kind of regal title for a minute, but I guess it just shows just how important the work that is being done is to everybody, and kind of it spans generations, it spans classes, it spans countries. Let's go back a few years to the advent of open banking and now kind of AI. How are these emerging kind of digital capabilities changing what you're doing in the world of financial health?
I think they represent the next generation of opportunity. So when I birthed the center, it was really the advent of the internet, the commercial internet that we could all use, that helped me to realize that all of a sudden we were going to be able to reach and serve people at a much lower price and to reach them where they were at in a way we hadn't before. That was really what fueled us. And I think now, 20 years later, that next generation of technology is going to create enormous opportunities to help people really improve their financial health. And I agree with you. It's the combination of open banking or data and AI. Because what is AI? It's data and compute, but really it's the data. And open banking is critical to help provide that data.
Can you just expand on that from people in the audience? What is it about the data that's so interesting and so impactful?
So the way I see it, nirvana is serving a customer of one, right? Extreme personalization down to the individual. Because certainly people have patterns, financial patterns, and that may look like someone else's. But at the end of the day, money is extremely emotional. And there are a range of factors in one's life that have an impact on it at any given moment. And so being able to personalize the advice and guidance to the human and to the moment in time is extremely powerful. But in order to do that, you've got to really understand the person's full financial picture. So not just what they might have in their checking account or credit card at one institution, but like what do they have in their retirement account if they have one? Are they receiving any government benefits? Those could be a significant factor in their income. And if you're going to be trying to make them a loan using cash flow underwriting, but the data you're looking at doesn't include a really important component of their income, makes them less likely to qualify for that loan, as an example. So, America, for better or for worse, provides enormous choice. Overall, I'm a big fan of choice. Choice is good, but it also adds complexity. So people's financial lives, even people who may not make a lot of money, especially people who may not make a lot of money, their financial lives are really complex. And having a computer brain like an AI help people do the hard stuff, but leaving the human in control, I think could be really powerful.
How closely linked is that kind of financial literacy topic to financial health? Are we talking about kind of the same thing, or is it slightly different?
It's going to sound a little crazy to say this, but I'm not a big believer in financial literacy. I mean, of course, I'm a believer. We should all know more. But what we know and what we do are often very different things. So, like, I know that I really shouldn't eat that donut. So I cut it in half and then I go back later and just eat the other half. That's me. We all know we should save. This is not like something we need to teach people. Everyone knows it would be helpful to have a little money set aside. It's hard to do. Even if you have a lot of money, it can be hard to do for all kinds of reasons. And so knowing and doing are different. Now, I think it's really important that people know how to ask good questions and how to be a smart consumer of all kinds of products and services, including financial products and services. But like, I have 2 master's degrees. I don't understand my mortgage documents. I hire a lawyer for that purpose. So I think for kids, it's vital because that's more about understanding how the world of finance works in general. Adults don't tend to learn that way. They learn in the moment. And so we talk about just-in-time information. Providers giving folks information, tips, guidance at the moment they need it. Like someone's in line at the grocery store, they put their card in, they could get a text right then and there from their bank saying, this is going to overdraft your account. Do you still want to do it? That would be much more useful to somebody than sending them a slip in the mail, literally in the mail or an email a few days later saying, oh, you overdrafted your account. So I'm much more interested in sort of real-time news you can use to help people make good decisions.
Yeah, I think I need that message when I'm going up to the first half of the donut, let alone the second half of the donut, right?
Exactly.
So rather than, the scales telling me, a couple of days later.
Right. I need the phone not just to like buzz, I need the phone to like shock me. Right? Yeah. Hey, don't eat that.
Is the work you're doing mainly centered around consumers, or does it also include kind of businesses, small businesses, business owners, etc.?
Yeah. So most of our work has been focused on consumers. We have over the years done some work focused on the financial health of small businesses. We've actually developed a framework and way to measure the financial health of small businesses as well. I think there, it's really recognizing the connection between the financial health of the business and the financial health of the business owner, who is also a consumer. And for a lot of small businesses, it's a sole proprietor. Their business and their life are the same thing, really. But banks aren't organized that way, right? Your small business over here and your consumer over here, and never the twain shall meet. And that's frankly where banks and others fall down on small business. It's one of the places. Because if the financial health of the business owner isn't good, they're not going to get the loan because they're going to have to co-sign for it anyway, right? And maybe the decisions they're making about the business are actually harming their own personal financial health, right? Think about all of the risk that small business owners take on in their own personal lives to make their dream come true with their business. So those things are really linked, and they're super important to address together.
So just wanted to pick up on something that you said about, I guess, AI, and obviously it's the early days of these kind of self-driving wallets and using agentic AI to kind of take action on people's behalves, which is scary. Um, and for a lot of people kind of listening, that sounds like something you'd see in a TV documentary or something in sci-fi. What does it take to bring this to life?
Let me say first that I am just as scared as the next person about the risks that AI represents, and I don't take them lightly. And in order to enable an AI to be your financial co-pilot or your agent, there is a lot of work and a lot of steps between here and there before I would feel comfortable. I don't think we're there yet. There's a reason why the most highly regulated institutions aren't. None of them are putting an AI in front of a customer, because even the closest they get is their chatbot, and that's a rules-based tool. So the risk is extraordinarily low there. So I just want to say that very clearly to start.
How is it that you go about kind of mitigating those risks?
Yeah. Well, I think one of the risks that I'm most concerned about is bias, because the fact is, AI is only as good as the people who train it and the data that's used. So it's really important to make sure that we're using data that's representative of all consumers, not just people who make a lot of money or who are extremely financially healthy, because that's not going to be helpful. And also we need to make sure that it includes all kinds of data sources. So if you're someone who gets food assistance, that could account for 20% of your income ultimately. And if that's not, that data isn't in the mix, you're missing an important piece of that person's bigger financial story. So I think one set of risks around bias and representativeness is really around the data. But I also think that it's really important that we're not training these AI tools to be providing financial advice in the way we do it just for wealthy people, because it doesn't necessarily translate. Making decisions about how to invest your money or when to pull down Social Security and thinking about tax implications, those are important. And AI will be great for that. But that's a very different set of intelligence and decision making than the average person needs. I think that's really important. I think there are some decisions that we make all the time that if we could have a computer, like set it and forget it, do the same thing over and over for us, we would do that because it's just easier and more efficient. So think about an AI that would take the money you have left over in your checking account every night, sweep it into a high yield savings account, and then bring it back every day. Just, and you could even set some parameters. Don't do that if, right? Like that, I think we have to start small. I don't think this is here's my life, go run it. And I also think that to start, it always should be permissioned. It should always be asking, do you want this? hey, I found you a credit card that has a lower rate than the one you currently have. Do you want me to go get you one? Right? So I think those things are super important because it's not just about safety, it's also about trust. And to your point, this can feel kind of creepy. And we're going to have to learn our way and help the consumer get comfortable before they're going to trust it to do anything really important.
And I think there's probably two layers to trust, because there's the trust of the agent, the robot, suddenly in charge of some of this decision making. But I think for a lot of us, some of the financial services providers we pick, or we picked when we were, starting this journey, were based on maybe who we trust and our friends and family recommendations. So, if you've got a robot kind of acting on your behalf, like that visibility and that maybe protection kind of disappears, and maybe that kind of erodes that trust. I don't know what you think about that.
I think it's going to be very interesting to see who offers these tools. Is it going to be the situation where every bank and credit union and fintech is going to offer their own? Is there going to be a third party that offers just agents that interact with all of your providers? Are you going to need like a super bot? And I think a big part of that calculus is going to be based on business model. But I also think a piece of this is going to relate to what is going to engender the consumer's trust. Which provider, which form. So it's very interesting. One of the companies that's furthest ahead is Intuit.
Right.
They made a huge bet on AI, and all of their products have AI embedded, and they're continuing to build out new use cases. So Credit Karma, QuickBooks, these all have specific AI use cases built in. It's taken them years to build trust, and they're still at it. And they have to actually teach the customers how to use it. What can I even use it for? And they're doing it for, again, for very specific use cases. It's not just like, here's your agent, have fun. So I think it's more likely to roll out in that fashion. And I think that's a really good way to build trust, because you use it for something very specific. It's explained to you what it's for. There's someone guiding you through it. And I think the providers that do that successfully, they're going to win the game.
I think this area is fascinating because I guess since 2008, the last financial crisis, there was maybe a bit of a departure of people's trust in that traditional banking system. You had a big rise of fintech throughout kind of, I guess, the last decade and a half. And we've talked to a few guests on this show about, is this about banks versus fintechs, or is this kind of banks in collaboration in fintechs to deliver these wonderful services to the end user? Where do you think this is going in terms of the next kind of evolution of kind of digital transformation?
Yeah. It's a complicated question. And, to your point, we were investing in early stage fintech companies before fintech was a thing. So we have been seeding and supporting these kinds of companies for a really long time. And back in the mid 2000s, we were doing it because, again, we understood that it was technology that was going to drive the next evolution. And the big behemoths were going to be very slow to move, if for no other reason than their own legacy technology. And at the time, did we think that some of these fintechs were going to supplant JP Morgan Chase? No. We thought some of them were direct to consumer and could definitely build a successful business, but we also figured that a lot of them would ultimately be acquired by the large providers who would essentially be buying innovation. And that's what's happened. We've had very few big IPOs of note in fintech land, whereas the giant banks, have to cater to everybody. So I actually think there's room in the market for both. I'm probably more sanguine about the ability of fintechs to, be the next giant bank, or that somehow banks or branches are going to go away. I, Chime may prove me wrong, and I'd be happy for them to prove me wrong. I'm very excited about what they're doing. I think in many ways they're one of the few fintechs that has proven at scale you can serve consumers who don't make a ton of money and build a very successful business doing it responsibly.
Interesting. Yeah, listen, I personally agree with a lot of what you said. I've always felt that this is a collaboration. And it kind of brings me on to my question around what you do to support kind of this world. So give us
Sure.
a bit of an insight into the work you do, who you're working with.
Yeah. So we don't work directly with consumers. We work with providers to get them to provide better in a way that is both profitable and responsible. And we essentially do four things. We do a tremendous amount of consumer research because if you really care about outcomes, you've got to have deep understanding of where your customer is coming from, where they're starting the journey. We also run a membership network, and we work with probably about 100 companies of varying kinds and sizes, who are all committed in some way to this financial health journey and are in different places as institutions in sort of executing against that strategy. We do some consulting, so we'll roll up our sleeves alongside companies that want help with product development or evaluating how a product is working, understanding the broader landscape, understanding their customers. And then the fourth, which I've talked about, is we have for a long time been supporters and investors in early stage fintech companies and in innovators. So we spend a lot of time with innovators, also making introductions and connections with financial services companies, whether for partnership, for acquisition, etc. So I like to describe our network as like a snow globe. There's a lot of different interesting people and companies and stuff going on in there. And we, every day are shaking it up to see what's going to happen, because there is no one company, one product, that's going to solve this problem. This is really about changing norms, so that ultimately the financial services industry understands that this is just the way you do business, right? A focus on the outcomes of your customers is how you run a profitable business that your customers actually trust and want to engage with.
I want to focus on the first thing you said, which is around the customer research. And are the companies you're working with, the partners you're working with, not doing their own research? Or is this kind of supplementary to that research?
I like to think that every company is doing their own. But again, when you're, particularly the large banks, when you're serving everybody, you're serving like the vast majority of the market. Sometimes you lack depth in any particular segment. And I also think that we are doing the research with a particular lens in mind. So we measure the state of financial health in America year on year. And a portion of this nationally representative sample is longitudinal. So it's the same people every year. So we can see change over time. And we're also asking a much broader and different set of questions than a bank or a fintech might be asking about their broader financial lives, so that we can bring real texture. I think the other thing to note is, as an example, years ago now, we partnered with New York University and ultimately wrote a book called The Financial Diaries, where we spent a year following 200 families in 4 different communities around the country. And we documented pretty much every dollar that flowed in and out of that household and the decisions and choices surrounding it. And those insights from that deep research have really changed the way even the government, the Federal Reserve, other researchers think about consumer finance. And the biggest aha from that research, which is still incredibly true and relevant today, is that people's financial lives are very spiky. Both their inflows and their outflows are not consistent from month to month. And when they have a spike or a dip in their income, it often doesn't match up with the spike or dip in their expenses. And so in a way, the aha is it's cash flow stupid, right? Most of the time in this country, particularly at the government level, we think about wealth or income. Those are really important measures, but they really don't tell the whole story. It's the cash flow that is what matters for most people.
Yeah, we a nod to a previous episode. We had a discussion around kind of payday loans and how so many people are living kind of paycheck to paycheck. Yet, as you said, it's so unpredictable what happens month to month. And I think the benefits of the work that you're doing and financial health to consumers is pretty plain to see. But why should banks and financial services and fintechs care? Why do they care about this over and above, obviously, looking after their customers?
Yeah. Well, our research shows that financially healthy customers are better customers. They're stickier, they're more loyal, they use or are open to using more products from that same institution. So, literally, from a business case perspective, the more you can try to improve the financial health of your customer, you're essentially building a better book of business. I think that's the biggest reason. I was talking with a financial services executive at a top 10 bank this week, who said that they don't have to make a ton of money off of customers that don't have a lot of money. What they need to do is to avoid them charging off. If they can avoid them building up lots of overdrafts and charging off, and they can, essentially break even or make 10 or even $20 for the year, like that's fine because they have a big enough base of customers that for the folks who, make say $40,000 or $50,000 a year and are in a very high cost market, they can make that work. So I thought that was interesting. The things that an institution needs to do don't have to be enormous or expensive. Like small changes can have a huge impact.
And is it something that a lot of the members of your community all kind of hold true in terms of that kind of desire to improve the financial? Is it like an entrance exam question to be part of the community?
It's not yet. We mostly care that folks are serious about it, that we don't want to be window dressing for bad actors who don't care. But it takes a lot to make changes at big institutions. And this isn't just, if you just do these 3 things or offer these 2 products or change these 2 policies. This is really a completely different way of thinking about the business you're in. Most banks really look at product profitability. But if what you care about is the outcome of your customer, you should be looking at customer profitability. It doesn't mean product profitability doesn't matter, but it's just a very different way of approaching the work. And it's also about what are the right metrics for success? Are you measuring the financial health of your customers, either by survey or using your own transactional data, so that you can understand what impact are these products or services actually having on their financial health, so that you can then make adjustments. So it's a virtuous circle testing, learning, measuring, repeating. Um, that's necessary.
Obviously, this is something that you guys have been doing for 21 years. This is a playbook that you guys have been following since pretty much inception. So maybe talk about some of those successes, how you guys have measured success, and some of the things that you're kind of most proud of.
We've ultimately built a movement and changed the conversation. So when I uttered the phrase financial health a decade ago, people looked at me funny and they didn't know what I was talking about. And now that still happens occasionally, but it happens far less. And there are people within a range of institutions who have financial health in their title. There are jobs within institutions dedicated to this work. There are cross-departmental teams at some of the largest banks in America focused on this. A growing number of institutions are actually measuring the financial health of their customers and using that data. These are all things that if I had said this 10 years ago, no one was doing this. In fact, last year, the OCC, the main national bank regulator, put out a white paper called Vital Signs, in which they urged banks to measure the vital signs, like going to the doctor, of their customers, and laid out, here's some transactional data you could look at to do that. We encourage you to do that. That was huge. So I think just getting the industry to understand why they should care and to be in a place to start taking action, that's probably our absolute biggest success. I'm also really proud of the investments we've made and the companies we've helped to seed, and more importantly, the ultimate end users that they've worked with. I mean, our companies have reached over 30 million consumers and provided a range of products and services that really were meant to improve their financial lives. That's a big number for a little organization like ours. And then I think on the
It's a huge number.
the policy front, we were the first organization to bring together the key players in open banking over a decade ago to start creating a set of guiding principles for responsible data sharing. That's what led the CFPB to ultimately create their own set of principles and to ultimately take on the job of creating rules around 1033 of Dodd-Frank, which says that consumers own their own data. Now, I was hoping we could claim success, but there's now a lawsuit, and it looks like the CFPB would like to do away with the rule and start over. So that's a longer conversation and a disappointment. But I think the common thread between all of the examples I gave is this is a long game. When you really want to change norms, it's a very long game. And so I'm just really grateful that we've reached a point, we've been at this long enough, where we can actually see the fruits of our labor.
Do you think it's a like a generational game as well? Because for a lot of our kind of kids, they'll be growing up in a very different world where this is the norm to them, where whether it's technology or AI powered products and services and financial health measurements. So how do you think about that? Does it become easier for you?
No, it doesn't. I wish it did. I agree with you that generational changes create an imperative. That's what will be a very useful lever for us. But in a way, this idea that like every financial services company is a technology company, that's over. Like people get that. Doesn't mean they're doing what they need to do necessarily, but like game over there. Everyone understands that. I think the bigger issue we have with younger generations is that, to your point, right? Look at what they've lived through. Look at the country they're inheriting. Look at the cost of everything they need to do in life. It feels all out of reach to them, whether it's rent or healthcare or higher education or childcare. These are enormous expenses that crowd out opportunities for building wealth. And that coupled with the tremendous uncertainty, and looking backward at the financial crisis and at COVID, I believe it's one of the things that's driving so much interest in the legalized gambling we call crypto. So I worry a lot about their financial futures. And in a way, the problems they face are not ones that technology alone can solve.
Interesting. Yeah, well, listen, after 21 years and with a bunch of successes, it would be easy to say, you know what, I've done a good job. But what kind of keeps you? What keeps? It's a two-part question, and I get told off by the producers when I ask two-part questions. But what keeps you motivated? But why did you go into this world in the first place?
This is about the last thing on earth I thought I'd be doing, honestly. I'm a former journalist.
Everybody says that on our show. Everybody says I'd never thought I'd do this, and yet they're all here. So I'm sure it's your calling. But
Well, that's funny. So I like two-part questions. I like questions in general. I'm an extremely curious person, and my favorite question is why. Why is it that way? Why do you do it that way? Why not another way? And in a lot of ways, my short-lived career in journalism as a newspaper reporter was really all about justice and fairness. That's what motivated that. Back in the day when, journalism was actually respected, and, it was about the fourth estate, taking it to the man, helping the little guy search for truth. And that's what motivates me. And it's what motivates me still. I made the switch because I realized I didn't just want to write about these things, these issues. I wanted to do something about it. And so I wended my way and somehow ended up at a community development bank and on the south side of Chicago. And from there, I started the organization actually out of that bank. So in a way, this is all an accident. But I think it's my ability to ask questions about something I only know a little bit about, and to be a smart generalist that enabled me to come into an industry like banking and say, well, why do you do it that way? And in banking, it's usually because we've always done it that way. How else would we do it? So I think that's been a big part of why I've been able to. I speak the language enough to be able to have a cogent conversation with somebody. And I can still think about creative and innovative ways of doing things that are actually good for business and better for customers.
I guess it's both it's a very interesting industry to be in for an inquisitive soul, just because it's so complex.
Exactly.
But it's also fascinating because it's constantly evolving. And I'm guessing back in 2004, or did you kind of have a vision that it would just change so dramatically from then
I
till
had
now and keep going?
I had no earthly idea. I mean, remember, we started it before this thing was invented, before the iPhone was invented. And, I wish I could say I saw that coming, but of course I had no idea. I wish I could say I saw the financial crisis coming. I mean, I saw there were challenges, but, so no. I think we've been I think the other thing that we are good at is reading the room. Like, we're always looking out ahead to try to understand what's going on and what might be coming, and to, pivot or be nimble in the face of what's going on in the world.
Do you look at other areas of the world and say, that's amazing, they're doing it really well, I wish we could do something like this?
Yes, I do, all the time. So our remit you're right, is the US, largely speaking, but in part because of our work with Queen Máxima, and in part because we're always looking for examples. We are a voice in the broader global conversation. And I am really excited about a number of institutions around the world. He is the living and breathing poster child for what we're really encouraging all institutions to do, which is to just look at their customers and their data in a different way and use that as an input to the decisions they make around the products they design, the way they price them, the policies surrounding them. That's really all we're asking.
So you've simplified the nirvana of financial health in banks, financial institutions quite well there. Use the data in the right way, care about your customers. What what next? Like how far can this go? What kind of, again,
Yeah.
I asked what keeps you up at night, little challenges to go and solve.
Yeah. I think two things. The immediate thing keeping me up at night is the state of the American economy and the dramatic policy changes being wrought by this relatively new administration and the ultimate impact that those policies will have on the financial lives of the people I care most about. So, what impact will tariffs have if indeed they go into effect? Um, uh, the labor market seems to be cooling because there's a lot of uncertainty. And when there's uncertainty, you don't hire, you don't make decisions, you don't invest. If the budget bill that's being debated in Congress right now passes, millions of people will lose their health insurance. They will lose their supplementary food benefits. These are all things that will have very significant immediate impacts on people's financial lives. So that's the thing that is most concerning to me right now. I think longer term, as I think about, again, this idea of changing norms within an industry as a whole, I feel like I'm a little bit racing against the clock because if you look at the top 20 banks in the United States and you look at the age of their CEOs, it's clear that in the next 5 years, there's going to be a significant amount of turnover, that we're going to get new leadership at a lot of institutions. It's already starting to happen. I mean, if Jamie Dimon and Brian Moynihan are both still in the chair 5 years from now, that would be shocking, just as an example. And even at institutions where I feel like we have done our best to embed this way of thinking, this approach into the fabric of the institution at every level, I've seen it happen where the next CEO comes in and has a different set of ideas, and gone is everything we've done. So really the only way to overcome that is to make it an industry norm, that this is just the way things are done. Like I would ask at the beginning, well, why do we do it this way? Because this is how we always do it. That's what success will ultimately look like, that we can withstand changes in leadership because it's just the way the industry operates.
So I don't know if you've heard the phrase VUCA, volatile, uncertain, complex, and ambiguous. And
Oh,
it's the
yes.
world we live in. It's the world we live in. And I think what's interesting about what you've been talking about is no matter the administration, whatever happens from a geopolitical standpoint, there's always going to be change. And it seems like financial health is kind of similar to physical health. If you're got a healthy body, healthy mind, then you can get through this change and ambiguity. And with financial health, there is one in terms of changing norms, but it is around setting those, I guess, those foundations that will help people, the partners you work with, but the end consumers, manage through this
That's right.
uncertain
That's right.
time.
Because financial health isn't a destination for consumers, it's a journey. And so it's not that we don't think people will have financial challenges in their lives. We know year on year that you're going to have a financial challenge. You may not have one for 10 years, and then you're going to have one. And the question is, can you withstand it and bounce back? effectively. And if we can set people up to be ready for those kinds of challenges, we will have done them a world of good, and we will have strengthened our own institutions in the process.
So, using your crystal ball, maybe 10 years from now, on the Financial Health Network's 35th anniversary,
Oh, God.
big party. What are you sat there talking about? What does the next kind of 10 years of success look like?
So, we actually just a few weeks ago at our conference that I mentioned put out an initial set of standards for designing checking accounts and credit cards that help people spend well. Because the question we get most frequently now from the institutions we've been working with for years and years and years is, just tell me the answer. Like, what do you want me to do specifically? And as much as I see the complexity in the world and I'm very comfortable managing it, most people just want the answer. And so we are, the vision is to create a library of standards, product design standards, for all the kinds of financial products and services that touch people's lives, and to ultimately benchmark the industry against their performance. So in a few months, we'll put out actually an initial assessment of how the largest financial institutions perform against this set of standards. And so I think in another 14 years, we will have there will be a very clear and robust library of standards that make it very clear what's expected of institutions in terms of how they design products and experiences for customers. And, banks will, and other financial providers will recognize this as a basis of competition. This is what they have to do to be competitive with customers in the marketplace. And as part of that, they will be leveraging AI to help people better manage their own financial lives and make good decisions.
Is that a global set of standards, or is that focused on the US for now?
So it's interesting. We built them with the US in mind, but we sent them to Peter Jacobs at ING Netherlands. And he's like, these are great. They're totally relevant. So he's busy scoring his own institution against them. So I think certainly in wealthy countries, they could ultimately be universal. I think lower income countries, it's probably a different kettle of fish.
And then how much pressure do you expect from consumers to ultimately put on their financial service provider to adhere to these standards? Do you think that this is going to be a kind of consumer driven kind of change?
I do, because open banking technology actually puts the customer in the driver's seat more than ever before. That plus more choice. And being able to port your data, to pick it up from one institution and say, I'm done with you. Right now, that's really hard to do. You know how it is. Like, oh, I have this checking account, but all my bills are paid there, and I've given the number to all these different billers. It's a huge hassle. But imagine being able to make a shift, like with the click of a button. That really enables people to vote with their feet. The data is very clear that this is what people want, and they're not necessarily getting it.
We talked about this, the era of choice, but there has been a barrier to choice, which is the ease of switching. And if you now have technology, AI-driven technology that allows switching to happen, that you don't even have to participate in because it's just picking best providers, it's going to be super interesting to see just what happens and how all of these financial services kind of react in terms of, and we talked to kind of previous guests around user experience was really, really important for 10, 15 years, AI or robot experience is going to be very, very different. And adhering to standards, that people like yourselves are putting out is going to be fascinating to see how quickly kind of people react to that.
Yeah, I also think that there's a role for us to play in creating the ultimate standards that'll need to be in place for AI financial co-pilots. But before we can even build those standards, we really have to understand how to evaluate them. Like, what does success look like when one of these things is working well? And how can we then assess different tools? What does it need to do and look like to be effective and successful and safe for these use cases? And then from there, we can build a set of standards around it.
As I said at the beginning, you were the first recommendation and invitee that we've had on. So I'm going to ask you the same question we asked JP and our other guests. If there was one or two people, maybe we could ask the Queen Máxima, to come on. But apart from her, Her Royal Highness, who would you like to see on this show?
I think you got to have Peter Jacobs. He's my new favorite. He's super inspiring, but he's also very practical. He's actually starting to convince his peers and other running INGs in other countries to do what he's doing. And he talks about the business case, I think, in a really smart way. He's my vote.
Jennifer, thank you so much for joining us.
Thank you.
It's been fascinating talking to you. That's it from me this week. To keep the conversation going, you can follow us on our socials at the bottom of the page. And of course, don't forget to follow the show on Spotify and subscribe on YouTube. If you enjoyed what you heard today, leave us a review, tell your friends, or better still, do both. We'll be back next episode to explore more life-changing innovations in digital finance. So, wherever your travels take you this week, remember to join us then for the next installment of Money Travels presented by Visa.